Hey everyone, it's Wolfgang. I want to talk about fixing cash flow problems in your business. Cash flow is cash in to the business minus cash out of the business. So cash flow issues are very common in businesses. And there are a lot of reasons for that. But cash flow is a survival issue for businesses. If your cash flow is in bad shape, it can threaten your survival. So if you become aware of the cash out part, if you become aware of it, and I'll explain what I mean by becoming aware of it as we go through this, but if you become aware, or should I say more aware of the cash out part of your business, then cash flow can improve. If cash flow improves, cash reserves can improve too. And cash reserves, meaning working capital increasing in your business. You have higher cash reserves, you have higher working capital. The business can survive downturns in the economy or the COVID pandemic. So let's talk about the COVID pandemic. We were in business, like most people were during COVID, and our business suffered mightily. And we had substantial cash reserves. We had no worries. We learned a long time ago to have substantial cash reserves, working capital, so that no matter what happened in the economy, there would be no chance for us to go out of business. We learned that lesson a long time ago, and part of my objective is to help anyone out there struggling with cash flow to bring to light some improvements you can make so that this kind of thing doesn't happen to you. 200,000 businesses during COVID failed. The number is actually higher, but if you look up statistics online, the most accurate statistical reporting agencies will claim over 200,000. I think the number is a lot higher personally, because if you think about it, 200,000 businesses, divide that by 50 states, 50 states, that's only 4,000 businesses per state. So I don't really buy that number. It would not surprise me if far more than 4,000 businesses in each state during COVID failed, went out of business. I suspect the answer is higher. But another statistic, only 15% to 20%, 20% is one out of every five businesses have enough cash reserves, that's cash flow after you eliminate the cash out, have enough cash reserves for 3 months of operations. In other words, if another pandemic happened, 15 to 20% of businesses could survive if the economy was shut down again like it was during COVID. So if you think about this, 15 to 20% of businesses have enough cash reserves to support operations for 3 months. And you think about how long COVID lasted. This is another reason why I think 200,000 is a low number. I don't think that's an accurate number. I think it's low. Okay, so let's talk about improving cash flow. Again, the objective is helping the business survive in a downturn, or in the rare chance it would happen again, another economic shutdown. What we want to do two things. We want to become aware of what the cash flow is, particularly the cash out part of that formula. We want to become aware of it. And then number two, we want to take steps to reduce the cash out so that we have higher cash flow that we can pipe into reserves, into working capital, that we can set aside for working capital. Because the reality is, for us, this number was years, like well over a decade. We've got some, we learned some hard lessons a long time ago, and we learned not to let this kind of thing happen. 3 months is 90 days. That's not sleeping at night. A lot of these people during COVID probably had a tough time sleeping if they only had 3 months worth of cash reserves for their business, because the whole economy was affected. So the biggest expense most businesses have is payroll. And there can be inefficiencies in payroll. Like it or not, the ability to hire the right people for the right job is not that easy. Most businesses learn this through experience, that hiring the right person at the right time for the right job, not an easy thing to do. And because of that, the payroll expense can have some inefficiencies in it. And one of the ways you can reduce your cash out and thus improve cash flow is to reduce staff. But you have to do it intelligently. You have to be sort of judicious and systematic about how you approach this. but payroll is usually the largest expense a company has, so that's got to be the first thing that we think about. And so there's a process you can use. It's a very simple process. I'm going to go through it. You can list all the employees in your business. You can list all the job functions in your business. And I'm not talking about the job functions that each employee does. I'm talking about list all the employees, list all the job functions, and then note which employees can do multiple job functions. Usually there are employees who either came into the business with training or experience in areas outside their job function in your company. So you want to make note of which of your employees have the ability to do multiple job functions. And I'm not talking about does the employee want to do something else in the company. I'm talking about straight up what can each employee do besides what they're currently doing, what job function, and make a list of that. The next step in this process is to go back over the past year and note the performance reviews of every employee. So after you've done this, you now have a list of all employees, a list of all the job functions in your company, and a list of the reviews. And so because we're trying to improve cash flow, and because we know that there are inefficiencies in the payroll, there are inefficiencies in terms of do you have the best employees in the right jobs? The answer is usually no, because hiring is not easy. Now that we have those three things, list of employees, list of job functions, and employee reviews, it is now time to rank each employee and prioritize them. The highest priority employees are those who can do multiple job functions and have had good performance reviews over the past year. Those are at the top of this priority list. Rank all employees by priority. At the very top of your priority list, and in this case, the priority list is we are going to prioritize retaining these employees because they've got good performance reviews and they can do multiple job functions in the company. Anyone at the bottom of the priority list, perhaps employees who can only do one job function and do not have, they can have average performance reviews or worse, right? Average or worse performance reviews. They go to the bottom of the priority list in terms of who do we keep. And the one thing to keep in mind about this is you don't have to wait for tough times to show up. You can fix your employee problems at any time. You can do this right now, even if your business is healthy. You can say to yourself, I'm going to prioritize my employees by work function and performance review. And those at the bottom, a certain percentage of them or a certain number of them, we will let go and then we will try to replace them with better employees, if the business is doing well. But in this case, if we're trying to fix cash flow because there are cash flow issues, then you don't necessarily have to hire them back. You can just prioritize the employees by number of job functions and performance reviews, and those at the bottom who can only do one job and don't have great reviews, average or worse, you can lay those off. You can lay off the performers who only do one job. And then after you've made that layoff, you have signaled to the remaining staff that we are looking at our biggest expense, payroll. We are trying to solve a cash flow problem. And so everyone who remains in the company after you've done this is going to be on their toes. And so here's what you do. Offer cross-training to all the remaining employees. In other words, you want to encourage employees to be able to do multiple job functions so that the next time you have to go through this process, if you're trying to improve your cash flow, you will have more employees who can do multiple job functions. If any of the employees who remain say, no, I refuse to do additional job functions, then you should consider laying those off if you can, because you can hire back anyone who you lay off for the second step, and you can find people who have multiple job functions in their skill set. Because if you are having cash flow problems, if you've got too much cash going out, your survival is affected. It behooves you, if you have a survival instinct for your business, it behooves you to go to work on your biggest expense, which is, payroll. Okay, so let me move on from that biggest expense. Many owners outsource bookkeeping and accounting functions in their business. A lot of people will hire a part-time bookkeeper, or they'll have a monthly bookkeeper charge that they pay. They outsource all the bookkeeping. And generally the way it works is, you have a QuickBooks account, you hire someone outside the company, a bookkeeper, you give them access to your read-only access specifically to your QuickBooks account so that they can manage your bookkeeping for you, and then you pay them a fee. And so you don't even have to look at your books anymore. So you've got to get out of that habit, because that's how you begin to become unaware of cash out. cash flows that are going out of your business. If you're outsourcing your bookkeeping and accounting, you may not know the highest cost items out of your business. And there's a real gotcha in today's world for businesses that I'm going to cover here in a couple seconds that lead this to being a big issue in terms of draining money out of your business. It's a very sneaky thing that some vendors do that I'll cover in a couple seconds here. So what you want to do is you want to try to bring the bookkeeping in-house, and you need to learn it yourself. And if you can't find the time to do that, then you should find someone who can train you, incrementally to acquire the bookkeeping knowledge. If you're just outsourcing and you refuse to look at it, the one thing you have to understand is knowing how accounting books work. That is the blood and the guts of the business. It's very important to understand how the cash flow works in the business. What are you spending money on? What are you making money on? So you bring the bookkeeping in-house and you learn it yourself. Another thing you can do to reduce cash out is to renegotiate with vendors for either lower payments or worst case, longer payment terms so that you reduce the monthly cash out. And this is the sneaky thing that is going on these days. Cut all possible software as a service subscriptions. So I want to put it to you guys this way. Have you ever been told by a vendor, we only accept automated monthly billing? Most of you are going to say yes. Most of our vendors will not do business with us unless we agree to automated monthly billing. And the way it works is you hire a vendor and then you agree to let them take money out of your bank account every month or post a charge on your business credit card every month. And the vendor might say, we just want to make sure we get paid. But the reality is, the sneaky thing that's going on here is vendors know that if you're not actively playing a role every month paying that bill, you start to forget about it. At a minimum, it doesn't come up into your consciousness that I'm spending money out of my business. This is a cash out problem because some of these software as a service subscriptions are not cheap. And these guys have gotten really good at refusing to work with you unless you agree to automated monthly billing. If they will not send you a bill and allow you to pay it, screw them. I'm sorry, dump them, because they are basing their entire business on the fact that out of sight, out of mind. If you're not paying that bill monthly in person consciously, you will forget about it, and they have a free ride even if you're not using the product. So can you find other software as a service providers? Yes, there's a gazillion of them. Software is easy to write. I'm a software engineer. So you need to find a replacement for some of these guys who are really hardcore about, we don't want the businesses we're charging to know that we're charging them. That's what this is all about. And I'm sorry if I sound cynical, but that's really what a lot of this is. And then you also want to bring outside vendor work in-house. So an example of that could be if you're in the real estate business, we're partly in real estate, and you hire vendors, you outsource certain work that's done fairly constantly or frequently, you could train someone in the company to do that work instead of hiring the outside vendor. That's where having employees who can do multiple job functions comes in handy, and having employees who will agree to cross-training comes in handy, because if they agree to that, you can train them up and you can because you cannot control what vendors charge, but you can control what you're paying the employee. If you're only paying the employee and then you're paying for the materials, then you have a labor and materials cost instead of a markup from the vendor. Vendors will mark up because they want to make a profit. And so if you bring that in-house by cross-training employees, you can reduce the cash out. Because the whole thing that we're trying to do in this is we're trying to maximize the cash flow by keeping as much of the cash in as possible. We're trying to reduce the cash out. So I think I covered everything. Let me just check to see if I missed anything here. So, oh yes, insurance. You should check your insurance policies. Again, we're trying to reduce the cash out. At insurance policy renewal time, increase the deductibles. Try to maximize deductibles if it makes sense to cut down the cost of insurance renewals. And obviously, if you're aware of a critical insurance policy that you don't want to mess with, that's a different story. But in general, businesses tend to have a lot of insurance. And ask yourself, how many times over the past 5 or 10 years have you made an insurance claim? If the answer is low or zero, then you should increase the deductibles and reduce the cost of the renewal of the insurance policy. Another thing you can do, if you buy supplies for the business, buy supplies in bulk and get a discount. And then one other thing you can try, if you have business credit cards, switch to business credit cards that offer rewards. If you're constantly buying stuff, if you or people in your company are constantly buying things with the company credit card, make sure you switch to a rewards card so you're getting cash back for all your payments. I know a lot of businesses already do that, but some don't, and I wanted to make sure I mentioned that. That's a rewards-based business card. So I hope this helps. I mean, the whole problem with cash flow is a lot of people are unaware of the cash out, and part of the problem with owners is they don't want to do anything with the accounting. They don't want to have to learn the books, and you really should. You should just say, okay, this is something I tend not to like, but I'm not going to have to do it, and at least I can learn about it. So if something is screwy, I will be able to notice it if it's going on. And the vendor issue, bringing vendor work in-house can save you a lot of money because vendors have markups. They tend to mark things up to make a profit. If you can cross-train employees, that can save a lot too. The biggest expense you can fix, though, is the payroll. And if you do lay people off, just remember when times are better, you can hire back then at that time. So if you have any questions about this, I mean, the COVID pandemic taught all of us a lot of these lessons anyways. And if you didn't pick up on those, this is a great time to take a look at some of this and reduce the cash out so that you can stack up some reserves. Because going out of business, having only 3 months of cash reserves is a mistake. That's a mistake. You want to be able to sleep at night. I mean, when you're in a position to say, okay, the economy is shut down and I'm going to be here for 10 years, that's a cool thing. That's a worthwhile goal to have versus not being able to sleep because you say, I've got 90 days of reserves, and then not only is my business shut down, I'm out of money. So that's kind of a mistake. So if you have any questions about any of this, please post in the comments. I'll try to answer them. And I really want to thank everyone for watching, and have a great day.